Alrighty, well, let's dive straight into things. Hey, thank you very much for attending today's webinar, everyone. We're going to be covering planning for the future using the scenarios tool in Figured. Just to quickly introduce myself, my name is Nick. I'm a part of the customer success team here at Figured. And today what we're going to be going through is a two-part approach. We're going to look at the fundamentals and the components of a scenario. And then right at the end, we're going to cover some of the questions and some of the things that you can ask yourself, either as an accountant or as a farmer, with the scenarios and where you want to take those scenarios. So we'll be doing a little bit of theory and a little bit of practice, and let's dive straight into it. So the core components of a scenario is your income and your assets and liabilities, and then the model of all of the changes you want to make. So when you're creating a scenario for the first time, you can import your source of income and expenses. So if you have a livestock tracker, for example, you can import that into Figured, and then we'll use that as the base for one of your sources for income. The same thing happens if you have a milk tracker. That comes in there so that you can record where your money is coming from in terms of servicing your business over the next 5 years. And then we can also bring in some of those farm working expenses into there as well so that you have a realistic base for your scenario. After that, we then have the assets and the liabilities for the farm, which is really important to have entered in there because one of the outputs for the reports is a few different ratios that'll be really useful. What you can do with Figured in scenarios is have the overdraft calculated, have the interest calculated for your loans, as well as the payment. So we can choose what type of structure we want things like loans to be. And we can choose different types of assets to have in there too. Then after you've created that as your base, you're then going to be modeling the changes that you want to see with a scenario. Whether that's a change to the assets and the liabilities, purchases of a new herd, taking on a new loan, or even just business as usual. And that's one of the things that we're going to be exploring with this webinar, starting from business as usual, and then where do you want to be in 5 years as an aspirational goal. With scenarios, it uses an identical chart of accounts that's coming through from zero. So it's really important to have the zero aspect of things set up, just the same as what we did with our other webinars where we covered some of the fundamentals of dairy trackers and beef and sheep trackers. When you import using actuals in Figured, and when I talk about import, I'm talking about importing into the scenario. This data is coming through from zero, so it's really important to make sure that your zero side of things is up to date and that you do have a comprehensive chart of accounts that makes sense for the kind of business you're in. Importing trackers also imports their mappings. So that means that if you have a particular account mapped to a tracker, the only way to interact that is through the tracker and the scenario itself. Then we're going to go through creating a scenario. So you can pick the financial year that your scenario starts as well as the length of its duration. Then the next thing is that we have these really flexible privacy settings. So you can choose it to either be only visible to you, visible to your entire organization. So if you're an accountant on a farmer's file, everyone in your accounting firm would be able to see it, but the farmer wouldn't. Or you can have it visible for the entire team. And that means anyone who has access to that Figured file has access to your scenario. One of the most common ways to set up a scenario is to build a base for how things are kind of running now as a current 5-year plan, and then copy that existing scenario as your base. You can move them forward, so we can start in, say, 2018 and then move them through to 2019. Or you can make them longer, so you can increase the duration. You can't move it backwards and you can't shrink them. There are different types of licenses that scenarios are available on. So they're not just on Figured Lite. You can get access to them through either Financial Farmer, so the full version of Figured, or we have a version of Figured Lite called Figured Lite Plus Scenarios, which is only $17 per month. And that gives you access to Figured for end of year reporting, as well as for your scenarios. We're expecting a lot of people will be using their Figured Lite accounts that they will have set up for their clients as that base for importing. So now that you have last year's actuals in there already, you can use that as your base for moving out for modeling your scenarios. With the Figured Lite Plus Scenarios, there's just one little thing to pay attention to. It's that upgrading from a Figured Lite to one with scenarios has a minimum 12-month term associated with it. So it's $17 per month for the 12-month period. It's available for multi-farms as well. However, when we interact with scenarios at a multi-farm level, it's just at the consolidated view. So it's not for each individual farm. Then the outputs from scenarios are these high-level yearly plans. We're looking at things as year by year by year. We're not looking at it with The income comes in January or February. You'll get an output of both financial reports as well as this great overview with lots of really interesting indicators, which we'll explore a little bit later. But at the core of it, scenarios are your high-level plan. You get to view the output for each financial year, as well as things like livestock summaries and bringing in some really important production-related KPIs. But it is just that high-level plan. And we're going to go ahead and create a scenario for the first time. So let's do that now. Get started. And then we'll have a few different options here. So I'm going to give it a name. I'm going to call it my current 5-year plan. And this is a great way to start building out a scenario, just doing what they currently do. And then later on, you can copy that and use it as your example for how your client may want to work in the next 5 years. So let's pick a type here as well. And then a detailed description. So if we change nothing. Then we get to choose the start date. So this is the beginning of that financial year. So for FY19, we're looking at a start at June of 2018. So let's do that. And then a duration, I'm going to leave it as 5 years by default, but you can bring this up to 10 years or all the way down to 1 year. But I recommend leaving this at just 5 years for now. While I'm working on this, I just want to have this available only to me. So I'm going to change the shared width to private. And then the type of operation, this adjusts the metrics that we'll be reporting in as well. So we can do this for dairy and we can do this for livestock like sheep and beef. But this also includes a horticulture tracker as well as a cropping tracker in there as well. But we're just going to focus on dairy today. Then let's go through to next. And now we have a choice for our starting point, whether I want to use this as a blank slate and enter in everything myself, or if I want to import some of the existing actual data that I've been working on. So if you've got a figured light client and you've added on scenarios to them, you can take those existing trackers that you've been doing your end of year reports on, import them into the scenario, and then spread that across for the remainder of the years. So let's try that now, importing and using my farm data. We can choose whether this comes from a budget or from your actuals and forecast. So let's do it as actuals and forecast for now for the different years. So let's do that for FY19 and with actuals through to a particular point. Then we can choose to import this either on a cash or on a profit basis. I'm going to leave this on cash though, and then choose the trackers that we import. So maybe I'll do this one as well as this one. We don't have to bring in every tracker. We could just model certain trackers. We could just model a certain aspect of the business. But when it comes to these farm expenses, it's going to bring them across for everything. So I'm going to leave that enabled. Let's then import and create that. Cool. So with our scenario that we imported, the first thing Figure's done is it's brought the dairy cattle on hand. So that's using whatever value we had based at that time. So we chose 2019, end of the year, so it's giving me whatever the on-hand value was in zero. The next thing I want to do here is start adding in their assets and their liabilities. So those could be things like the property they have available to, whether or not they have any machinery or equipment, and you can add this in with as much detail as you want. So if you're just doing a quick high-level plan, you want to whip it out real fast, you can just do an overview and aggregate some of those assets and liabilities. But if you've got a particular type of loan structure, we could enter that in as well. So I'm going to put in here some rural property. You can give it a name, farm block. And then instead of having to manually enter in a lot of this information, we can just chuck in the total area. And if that's the same as the effective area, that's great. The value per hectare, if you know it. So we can put it in there. And then a total value that will be an output from that. Then the same thing goes for adding our liabilities. We'll enter that in here, whether they have a loan. We can call it Bank 01. Give that a facility limit. So let's put in $1 million here. And then an opening balance. So you may be coming in and building a scenario while they've already had a loan for a little while. So we can put in whatever their current balance is. And then we can also change the type of repayment. So we have a few different structures in here, whether it's an interest-only loan, whether it's a table loan, or whether they're doing fixed principal repayments in there too. So I'm going to leave that as a table loan for now with an interest rate of 7%, and then how long it's got remaining in there. So let's say that's a 10-year loan remaining, and we'll save that now. We can restructure these loans later down the track as well. So that's one of the things we'll explore with our proposition. So now that's saved in there, let's just say these are our assets and our liabilities. You'll get a quick overview as with the opening position. So we can see here their equity percentage, which looks quite high here, as well as their LVRs. And we get a nice quick overview before we dive into things. So let's go next and then take a look at our next step here, the proposition. So the proposition is where you're going to be making these modifications, and this is where you're going to be modeling what they're expecting to do over the next 5 years. So we're going to start from the top and make our way down. The first thing we have here is the proposition, which has our assets and then our liabilities. We can modify the existing ones in there. So say we need to increase the limit, or we make a fixed repayment on one of these loans, we can click through to it and then model the change to that existing liability. Or if, say, we want to add in a new loan or a new purchase, we could do that. So let's say I want to purchase some machinery. I can change my type here to machinery and equipment, and I really want to buy a new tractor, so let's put that in there. We can choose when that occurs. So let's say that happens in 2 years' time. The total value of that purchase, so I'm just going to chuck in 200,000 here for now. And then even add a funding source there. So that'll create the corresponding liability there. If there's a sale involved with it, we can put that in there, and then that'll be going towards our cash flow too. And then same for revaluations. If it becomes more valued more or less, we can add that in too. So let's save that ahead now. Now that we've added that asset, here comes in that liability showing us the funding source for that. And let's leave that as an interest-only loan for now at 5%. And we can say either draw down that entire loan now, or we can choose to only take a certain amount of that loan now and then draw down further later down the track. So let's save that in now. So that proposition is where we're adjusting the assets and the liabilities, and it's where we're adding in, say, asset purchases or taking on a new liability. Then we have our income section, and you see we've already pulled through those trackers as they were sitting there and figured. We can open up through to that and then enter in what we're expecting our production to be for each month. So we could start in and we could say enter in our production for this particular year, and then copy that across to the rest of our financial years. If you want to model, say, a change in the milk payment price, we could use custom monthly values here, and let's proceed. And then we can enter in our own value in here as a farm gate price, or we can manually enter in what those payment prices should be for each month. So we can do that, enter in our production, enter in our price, like building out a high-level budget, and then just copy that across, or you can just put in the gate price up here as well. So let's save that for now. Oh, cancel. Then we have our existing herd. So you'll see, remember we imported in the dairy cattle tracker, and it's brought in some net livestock sales which were from this year. So we can go in and have the same level of detail that we would have had for any other tracker within Figured. So I can say record a sale, and I can choose, say, what month that occurs in, because that'll adjust, what year we're in, the quantities, the amounts, and that'll all come out in our reporting if we want to be really detailed. Otherwise, what we can do is we can say enter it in for 1 year, and then copy that across to the remaining years. So we can build it out once, push it across for the next 5 years, and that can be one of the great parts of our scenario too. With this herd having been in there already though, if we want to say purchase more livestock and it's a part of that same herd, we add that by adding that into this tracker here. If we wanted to model, say, purchasing a new herd, we would add income and then we would add in a new livestock tracker. So that would be if you were establishing a new herd. If you're just purchasing livestock for your existing herd, you'll do it by clicking on that tracker and then adding it. But then while we're in this other source of income, we can add in, say, other income. And remember, this is pulled through whatever the accounts are that are sitting in zero. So let's say I want to put in other income. I'm just clicking on that figure. I'm entering in an amount. And then if I want to have that for the rest of my scenario, I can just spread that across, and then that'll add it in for each year. The same as what we have in terms of spreading tools on the planning tab. So we can say increase that by 5%. But of course, because we're doing this at a yearly level, we don't pay too much attention to specifically what month that's occurring in, just that it's happened. But the only way to add an income like this is to either add it as other income or use one of your existing trackers, or add a new tracker. So we can save that in there now. and then that'll create a new source of income for us. Next, we have your expenses, because it's not just the income that we want to model, it is the expenses and how those are going to impact your ability to service debt. So we can click on Farm Wiki expenses, and this gives us a little bit of flexibility. So we can say enter them on a KPI basis. So I could say enter in my expenses per kilogram of milk solid for production, if I want to do a production focused scenario, or on a per cow basis, if I'm doing it on a purchase or a sale or breeding and finishing, or on a dollar per hectare basis as well. We can search through these, and these are just, again, all of these expenses that have come through from your chart of accounts that was sitting in zero. Those aren't the only expenses we can add, though. We can add in things like lease and rent, and whether you're leasing a part of the farm. Then same for interest here. We can add in different structures to the interest, but then we can also add in an overdraft to your client. So we can add in, say, a $500,000 overdraft, $50,000 overdraft, and we can just put that in for each year. Then the utilization percentage related to that, and then the interest rate. And we'll calculate what that interest rate will end up being. So there is an overdraft calculator in scenarios. Then we have things like depreciation, which we can budget for in here. Taxation, so Figure doesn't calculate the tax for these scenarios. You'll have to do that separately. Personal and drawings. And then if you want to make CapEx purchases in here, you can put that in there too. But let's cancel that for now. The end result of adding in all of these income sources and all of these expenses is your summary. This is your quick sense check before we move ahead and we start running reports out of here. So if we look at our summary here, we can see on a cash basis, the net sales and your net income, and then things like your EBIT, and then the net cash movement. So this gives us some really good detail here in terms of the farm, their financial summary, and then at the bottom we have some ratios like their interest cover, the equity percentage, or even things like their EBITDA per hectare. So we get some good financial results here that you can then explain to your client and break down over those 5 years. Continuing on there from our 5-year plan, once we've entered in all of our income and our expenses and our assets and liabilities, the output here are these great reports. So we can see a summary here giving us similar information to what we saw earlier and then with the ratios, but one of the great things we have are these indicators at the bottom here. This is a quick summary. You can bring this out in front of your client once you've logged in, and you can show them an overview with things like net profit and closing cash position in a graph format that's really easy to understand. So we can even look here, if one of the goals of the scenarios is to increase that equity percentage, we can do that. And then same with their net profit or their closing cash position. When you go through here and you modify and you take a look at the different reports, you can then jump back to your proposition, make some more changes to it, then move forward and then take a look at your reports again. And we can toggle between these different reports, which is a great way to say, bring a laptop or a tablet with you in a client meeting, and then bring out this scenario and start modifying things on the fly. Then once we're ready to export this, this will mark the scenario as complete, so we can do that. And what that does is it just adds a little green tick next to the scenario so we know which one to work off of. Then we can export all of this out to a PDF. So you can then print that off, hand it in with a management report, do what you like with it. And then this gives you the same kind of formatting that you would see in other parts of figured reports. So just to quickly recap where we started from, we were back in the scenarios tab and we created a new scenario. We built out that current 5-year plan, looking at their current assets and liabilities and how they're planning on continuing on. Then once you've built that out, you can copy that by clicking on these 3 little dots here and then copying that scenario. So that'll take that base that you've built out that you put a lot of detail into and then give you the same assets and liabilities. So we can say put in here our 5-year plan. But let's say we're going to call this our ambitious 5-year plan. So we want to increase production on this one. If we change everything. And we have the same flexibility there, whether we want to have this one as private or public, but it's not shared. The settings aren't shared with the previous scenario, so you can set this one to be shared and visible for the rest of the farm. Then we have that start date, which we can move forward, so we can increase the duration here, make this run for a longer period of time. But we can't decrease the duration. And here we go. We have that same flexibility that we saw earlier. So let's say that our opening position is all completed. And now we're looking at our ambitious plan. So we could go in and say, look, what if we were to, say, take on a loan and purchase a whole lot of livestock? So we could say, add a new liability for a bank loan, livestock loan, with a particular limit. And then put in that structure and enter all of that in there. And then through in our production tracker, we can go through and we could go add in the purchase for that. And depending on which year we want to do that for, we could go in and increase that. And then we'd be able to go through and go back to our milk tracker and increase the number of peak cows milked and increase what that production is, and then model out what that change to production would be. Or say another one that you can model is if the milk prices were to fall or if they were to increase, you could enter in a no gate price in there or enter in a no rate in there and then modify that across there. Or if you wanted to see what it would be like if they changed their milk supplier, we could go in, add a new milk tracker in there as well, change them to a different milk supplier, and then that would have prices and structures loaded in there as well. So there's a lot that you could do here in terms of changing the conversation that you're having with your client, building out new sources of income, or what would happen if we were to increase your production, how will that affect your profitability? Because of course the main goal of all of this is to make profitable farms. Then once we've done that, we'll have those reports that we could then run. We can then take a look at those indicators and swap between both scenarios and take a look at how those indicators change, and then export that as a PDF if you want to have a physical copy of that to send out or to print out. But that takes us to the end of the functional side of working with scenarios. There's a little bit here I want to talk about as well, which is around using scenarios for storytelling. So you would have noticed while I was going through that there were a lot of stories that I was telling. What if we were to purchase things? What if production were to change? And scenarios are a great tool for you to see further down the road. I recommend that you start by building now. If you weren't to change anything, where is that going to take you? What does your next 5 years look like if we just continue on business as usual? But then that then turns into its own story. And how do you feel about that? How does your client feel about that? Are they excited with the net profit that they're going to be running when you show them the indicator report? Are they happy with the equity percentages? Do we want to say set some goals and look forward into the future and then build out a scenario for what that looks like? By building out our now, we get to tell a story as to where we are and where we want to go. And it then turns into this conversation about feelings, and I think we should be really confident with approaching that. Now is also the time to change things. Where do we want to go? What changes, like adding in new loans or buying new assets, what changes do you need to make to get there? And the last thing is just to be ambitious with it. You can copy scenarios as many times as you'd like. You can make many different models and you can keep them private until they're ready. So you can have this, sitting in your back pocket while you're working on it, and then you don't have to reveal it before it's too early. So you can really try some interesting things, try some big changes to production, and really bring some great value to your clients. Then after we've built out that scenario, we know either where we're going right now or we know where we want to go. You can put that into action by using a yearly budget. Comparing that budget to your actuals and to that forecast as it changes throughout the year is really great to keep you on track to achieving those goals. That's actually the topic of next week's webinar too, building out your budget, and I definitely recommend registering for it so that you can learn how to build out a budget in Figured using production trackers and using that planning tab. Then before we sign off, I just want to do a little shout out for our enablement team here as well. If you are bringing your clients on board, you're bringing 10 or more on board, we do have resources available in terms of setting up those files and bringing up comparative data. How great would it be if you were bringing in a whole lot of clients and you already had those trackers all set up that you could just import straight into your scenarios? Reach out to our team if you're keen to learn a little bit more. You can reach us using the green chat bubble on the bottom right-hand corner of every page in Figured. That's where we have our support team based. You can find our help docs in there, register for future webinars, and start a conversation with our team where we typically reply in under 5 minutes. Remember, if there's something that we can't explain over text, we're always more than happy to pick up the phone and call too. But that takes us to the end of today's webinar on planning for the future with scenarios. I hope you found that useful, and I look forward to seeing you at next week's webinar where we talk about budgeting and forecasting in Figured.